Imagine being worth $32 billion and then losing almost all of it in just a few days. No hackers, no robbery. Everything simply collapses. This is the story of Sam Bankman-Fried, the crypto billionaire who went from a Wall Street genius to the face of one of the biggest financial collapses in crypto history. And what happened behind the scenes sounds more like a movie than real life. Sam Bankman-Fried, often called SBF, was born in 1992 into a family of Stanford law professors. From an early age, he was known as extremely intelligent and highly analytical. He later studied physics at MIT, one of the most prestigious universities in the world. During his time there, he became interested in a philosophy called effective altruism. The idea behind it was simple: make as much money as possible, and then use that money to help as many people as you can. Sam believed that becoming incredibly wealthy was actually the most efficient way to do good in the world. But ironically, that same ambition would later lead to one of the biggest financial scandals in modern history. After graduating from MIT, Sam got a job at the trading firm Jane Street Capital. Jane Street is one of the largest quantitative trading firms in the world, known for its advanced algorithms and massive daily trading volumes. There, Sam learned everything about arbitrage and complex trading strategies. But in 2017, something huge happened. The cryptocurrency market exploded. Bitcoin skyrocketed in value, and suddenly the entire world was talking about crypto. Sam quickly noticed a strange opportunity in the market. The price of Bitcoin in Japan was sometimes significantly higher than in the United States. In some cases, the difference was as much as 20%. So Sam came up with a simple strategy: buy Bitcoin in the United States, send it to Japanese exchanges, and sell it there for a higher price. This strategy is known as arbitrage. And at the peak, it was generating millions of dollars in profit every single day. Seeing the potential of the crypto market, Sam decided to leave Jane Street. In 2017, he started his own crypto trading firm called Alameda Research. At first, Alameda was just a small team of traders working out of an apartment. But thanks to aggressive trading strategies and massive market opportunities, the firm quickly grew. Within a few years, Alameda Research became one of the biggest crypto trading firms in the world. But Sam had even bigger plans. In 2019, he launched a new company, a cryptocurrency exchange called FTX. FTX quickly stood out from other exchanges. It offered advanced trading tools that professional traders loved: leverage trading, derivatives, futures, all in one place. The platform grew incredibly fast. Within just a few years, millions of users joined. By 2021, FTX had become one of the largest cryptocurrency exchanges on the planet. The company was valued at around $32 billion. Sam Bankman-Fried himself was worth approximately $26 billion. At only 29 years old, he was one of the richest people in the world. FTX began spending huge amounts of money on marketing and partnerships. They sponsored major sports teams. They signed deals with celebrities. They even bought the naming rights to the Miami Heat Arena, which became known as the FTX Arena. Sam became a regular guest on major news channels. He appeared calm, humble, and unusually casual for a billionaire. He often wore shorts and a t-shirt during interviews. Many people saw him as a genius entrepreneur who would transform the financial world. Some even compared him to Warren Buffett. But behind the scenes, something very dangerous was happening. FTX and Alameda Research were deeply connected, much more than the public realized. Alameda was not just another trading firm using the exchange. According to later investigations, Alameda was secretly using billions of dollars of customer funds from FTX. In simple terms, money that users deposited on the exchange was allegedly being used by Alameda for trading and investments. If Alameda made profits, everything looked fine. But if those trades failed, the entire system could collapse. And things became even riskier because Alameda held massive amounts of FTT. FTT was the native token created by FTX. A large part of Alameda's balance sheet was based on this token. which meant that a huge portion of their wealth depended on the value of a token created by their own exchange. It was similar to a bank claiming it was wealthy because it printed its own currency. As long as people trusted the system, everything worked. But if confidence disappeared, the entire structure could fall apart instantly. And that exact moment came in November 2022. A report from a crypto news outlet revealed details about Alameda's financial situation. The report showed that a huge percentage of Alameda's assets consisted of FTT tokens. This immediately raised serious concerns across the crypto industry. Many investors began to question the stability of FTX. Then something happened that triggered a massive chain reaction. Changpeng Zhao, the CEO of Binance, the largest cryptocurrency exchange in the world, made a public announcement. He said that Binance would sell all of its FTT tokens. This single statement created panic in the market. Investors immediately began selling FTT. The price started collapsing. At the same time, users rushed to withdraw their money from FTX. Within just a few days, customers tried to withdraw more than $6 billion. This created a classic financial crisis known as a bank run. Everyone was trying to take their money out at the same time. But there was one huge problem. FTX didn't actually have the money. The funds were no longer available. Billions of dollars had already been moved to Alameda for trading and investments. The exchange could not process all the withdrawals. Soon after, FTX froze withdrawals completely. Confidence in the company vanished overnight. Within days, FTX filed for bankruptcy. Sam Bankman-Fried's fortune collapsed almost instantly. His net worth dropped from $26 billion to essentially zero. It became one of the fastest destructions of wealth in modern history. Later investigations revealed that more than $8 billion in customer funds had disappeared. Shortly after the collapse, Sam Bankman-Fried was arrested in the Bahamas. Authorities charged him with multiple counts of fraud and financial crimes. The collapse of FTX sent shockwaves throughout the entire cryptocurrency industry. Millions of investors had trusted the platform with their money. Some people lost their life savings. The man who once claimed he wanted to earn billions in order to help the world had instead become the symbol of crypto's biggest scandal. Today, the story of Sam Bankman-Fried serves as a powerful warning. Even in industries driven by new technology and innovation, the basic rules of finance still apply. Trust is everything. And when that trust disappears, even a $32 billion empire can vanish almost overnight.